Hello everyone, and welcome to this afternoon session, and thank you for your patience as always. I just wanted to make sure that David had actually pressed the start record button, and he tells me he has done so. That's brilliant. So welcome. If this is the first time that you are with us, this is part of a series of webinars, and they've kind of been building on the principles of volume price analysis, the price cycle, market C states, and how we interpret those, and also how we use our quantum indicators. I'm certainly not going to go over the kind of stuff that we did in the early sessions. So if you want to catch up on anything, please just, if you head over to one of our YouTube channels, either my own one, Anna Cooling, or the quantum trading one, you can catch up on what I've just said, and it just covers it in a little bit more detail, and it'll help to explain some of the expressions that we may use and that you may not have come across before, especially with relation to what we refer to as C states. But before we start, as usual, I have the disclaimer on the screen, which I think you can all see. Brilliant. As you all know, this can be a very risky business. Please don't ever think of trading with money that you cannot afford to lose. So before I start, let me just pass over to David, as he doesn't often get a look in early on in the webinar, and then we'll start.
Thank you, darling, and a very warm welcome to you wherever you are in the world. It's an absolutely glorious day here in the UK, and I hope it's nice and sunny and warm where you are, wherever you may be, whether it's a morning, evening, or perhaps even middle of the night. So a very warm welcome to you. If it's the first time you've come along, it's great to have you here. If you have any questions, then we're more than happy to answer them either in the chat box, or if they're more detailed, then we will answer them on air. We generally start with the Mt5 platform, which is, as you may or may not know, is a multi-asset platform, which actually gives you access to, Anna's just pulled the screen across there, I've got the dollar index up there, top left, cable, and currency strength indicator at the bottom there. But it is actually a true multi-asset platform, which gives you access to all these markets, but in a very cost-effective way. So if you've never traded or invested in stocks or indices, in futures contracts or commodities, futures, then this is a great place to start, because it doesn't require the same level of investment and margin that will be required if you're trading, certainly if you're trading stocks and cash markets, and certainly if you're trading futures contracts as well. So it's a great place to start. It's a fantastic platform. If you're familiar with MT4, maybe you've started in Forex, you're thinking of maybe trading other markets like commodities or indices, it's a great place to go. I've got the NinjaTrader platform up. I've got the live stock feeds. I've got the futures contracts as well, and we'll flip-flop between the two. We tend to focus more on the NinjaTrader platform here, and we are developing other platforms as well. We've got Trading View on the stocks at the moment. That's being worked on, and then we'll be into TradeStation and one or two others in the future as well. So we're building the portfolio all the time of platforms. And one of the key things about the quantum indicators is that you can port them across from one platform to another at no cost at any time. So if you invest in a single indicator, you can port that across to other platforms as we develop them. And we make that available to all traders, because what happens over time is you start in one market and then maybe you migrate to another, and you want to upgrade to a different platform which has more sophistication maybe, and you want to take your indicators with you. So we make it very easy for you. I'm just going to pass back to Anna and we will get going.
A couple of things. The reason we've moved this session to 3:30 is primarily because we're just getting a little bit fed up with the racking about that goes on at the open, and you know, from a trading perspective, these crossover sessions, certainly if you trade Forex, you will know you really do have to be aware when, you know, one center opens and another. The London Open is a classic. You've got Europe, and you get a lot of volatility. And, you know, much as it was interesting to look at, in all honesty, if you are, you know, if you're going to be day trading, you know, your day trading is not just going to be at the open of the you know, of the financial center that you are looking to trade. I mean, you know, there's lots going on. It all seems terribly, you know, as I said, a lot of volatility, a lot of price moves going one way or another before the market actually settles down. But in all honesty, that's only a very, very small part of what actually goes on, you know, for the whole day. We've still got another 6 or 7 hours ahead of us, so you really can't judge it by what happens in that sort of very small, short window. And then what inevitably happens is we started to look at something, and lo and behold, you know, we say, well, we think this is it's going to develop, but you have to be patient. You have to wait. So we've moved it to 3:30, and also in terms of for news, there's always a for the US certainly there's usually sometimes news at about 3:30. I don't think there's anything terribly significant today. I think the Empire Index has come out, so that's one reason. And also the other major change that we've done to this session is that we're actually going to focus on different markets in each of the sessions. So last week we looked at commodities, which is why I said if you missed any of these sessions, just go back and, you know, if you want to look at the recordings, because we really talked more about commodities last week. But today it's very much going to be about stocks, and stocks is something where we started in futures and then we moved into stock, both stock trading, stock investing, and stocks for covered. We did covered calls, we did options for stocks. So really, that's, I think my heart is really in covered calls. Is it yours, David, as well? It was a really brilliant time, and one day, very soon, we will be going back to them. But stocks, certainly volume price analysis for stocks, I suppose you could say that's where it sort of first started with Richard Wyckoff. You've got Richard Ney, they very much in the stock market, Jesse Livermore, etc., etc. So if you like, it's like VPA coming home, as it were. And we're also only going to be looking at the US market. So I know we do have, you know, people from the UK, and it isn't, you know, we could be looking at UK stocks, but in all honesty, most of our users, the readership for my books as well, is primarily for the US. So please don't be offended if you are in the UK and we're not going to be looking at the FTSE. However, if you have one or two stocks that you want us to look at, maybe we can put them down and look at later on. But certainly for day trading, if you know, day trading for stocks is primarily something that is that happens on the US market, because you have such a huge number of stocks to choose from, and in some ways you are genuinely spoilt for choice, which is why I've actually put up this this website. This is called FinViz, and it's a filtering system. It's a very, very sophisticated free filtering system for stocks. So if you are going to be thinking about looking at day trading, you are certainly going to have to make some important decisions as to, well, first of all, you've got to have enough capital and margin, because I don't know what the latest requirements are, but certainly when we were doing it, what did you have to have deposited, David? It was quite a large sum of money, wasn't it? Yeah. It was quite a substantial sum of money. So, you know, it's not cheap. But having said that, as David said, if you go to the Mt5 platform or a broker that offers Mt5, you can trade stocks in inverted commas, but you trade it as almost like a CFD, as it were. So you can trade a stock, but without actually having to, you know, put up the margin that is necessary. So that's one. So, and also as a trader, you really do have to remember that you are looking to trade both sides of the market. And there is an issue with stocks, is that there's a bias to the upside, and that is because people look to buy stocks for investment. They're always looking for things to go up. The idea that it could ever go down is something they really, really don't feel comfortable about. I know I think some guy contacted me a few years ago. He was very into volume price analysis, and he was very excited about using volume in his analysis. But he then emailed and said, "But you know, of course, I could never short anything. I could never sell. You know, I think it's." He actually took a moral stand about shorting a stock, and I'm thinking, well, you know, fine, that's your opinion. But as a trader, you are not looking for, you know, the next 10 bagger. What you're looking for is a stock that will, you know, that you're looking at a price cycle of a stock, and you're looking at it from a VPA perspective and a C-States perspective, and you're looking for an opportunity. Is that stock at a distribution point? Is it as an accumulations point, or is it in a trend? Are you looking to join that trend, or are you looking to short, you know, buy, sell? You don't really care. As long as you understand what it is actually doing on the chart, then you know that's all you are interested in. And in fact, I must tell you just a little quick story. I do know that a lot of professional traders, prop traders, they do use volume price analysis as their foundation, if you like. They add on all sorts of other things to it. Maybe they use Ichimoku, maybe they use Fibonacci, maybe they use Elliott wave. But the core of their trading is this deep understanding of the relationship between volume and price, and in the sense that they are always on the lookout for the anomalies, and they're looking for confirmation that once they're in a move, they know that the move is going to continue because the volume is going to continue. And I've had this on my Twitter feed, and you know, there is a particular prop trade, and I'll put the link up actually in my on my Facebook page. You can go and you can watch the video. This is someone who has bought the book, and he has selected just 12 stocks that he sort of really hits every day, either a buy or a sell. He's not really interested, you know, he'll buy it in the morning, sell it mid-morning, buy it again in the afternoon, and sell it before the market closes. And as I said, and he will apply the principles of volume price analysis and his other indicators as well to you know, to make money basically. But to return to FinViz, because obviously with stocks, particularly in the States, you are going to have to be aware of, not only do you have to select your stocks, but you have to come across things like earnings, the dates when earnings are due for the stock. As you can see from the screen, I don't have to explain to you. You can see, you can search on any kind of a filter that you would like for any particular stock. I've actually pulled up which stocks are for earnings. Let's put today. These are the ones that are reporting today. Then we have this this week, we've got next week, and so on. And so I'm not going to go through all the criteria that you can search on. But the other part of this FinViz that I want you to have a look at is this float, the floating supply, because an important part of stock trading and investing is understanding what the floating supply is for a particular stock. And it's not something we're going to do in this session. We're probably going to do it the next time we're going to do a stock, so we're going to talk a little bit more about it. And of course, all this is in the context of what's happening in the broader market. I know for a fact, I think the bond yields are going up. They're over 3%. That doesn't tend to be very good for stock markets. But what you also have to remember in day trading stocks is not all stocks will track the main index. So you will always get a divergence. So you will always do stocks that do well when markets are going well, and maybe not do so well, and then stocks that will actually go down when the market is going up. And one such that we looked at a few weeks ago was actually GE, and I think that's one that you've got as an example, darling, haven't you? Yeah, GE is one that where it, you know, the stock market is going to the moon, and GE is going south at a fairly fast rate, as it were. That's all I'm going to say about a stock, just general introduction about stock trading, not so much about investing, what you have to be aware of if it's something that you're going to think of. We're going to have a look at how volume price analysis will be applied to finding a good trade in a particular stock. We haven't got a portfolio at the moment. I think it's something David and I are going to put together for future webinars. We're going to put something like a dirty dozen together, like my little prop trader friend over in the States. So I'm going to pass over to David. Do go over to FinViz and spend some time over there, because it's a fantastic site. It's great. I mean, the free one, obviously, you've got, ads all over the place, and they've got an elite one, and they've got maps as well, heat maps. You can see here at a glance what's happening, what's down, what's up, and also sectors, of course. So it's, if you really want to increase your education about the stock market, then this is a great place to go over and just play around on the side.
Just switching screens from Anna's over to the NinjaTrader, which should be coming up anytime now. Yep, just checking over Anna's shoulder there. That's great. I'll just move the chat box out of the way. I've actually got GE up, and just to highlight what the various charts are, on the top left I've got GE on a 3-minute time horizon. At the top right here, again, I've got GE. One of the nice things that you can do with NinjaTrader is you can actually link instruments. So this little green square here just means you've got an instrument link. So it simply means that all these charts are linked together. So when you change quickly from one stock to another, it automatically changes for all the various linked charts. This is on a renko at the moment. You can see this is set to 2 renko. And what that means is, because we're on GE, which is trading at $12.81 at the moment, all these bricks here are basically 2 cents. And obviously that will change according to the stock. If it's a very high value stock, then the brick size would be a lot more in terms of cents and dollars. And likewise for lower value stocks, it will be relatively smaller. Down the bottom here, I've got GE on 15-minute. And over here on the left-hand side, for reference, I've got the YM, which is the futures contract for the Dow 30. And what I've also got on a similar tab, I've got the NQ here, which is the NASDAQ, and I've also got the ES. And what's interesting at the moment, and we're seeing this a lot right now, and we've seen it reflected many, many times over the last few weeks and months. So this is something which is very unusual. Doesn't happen a lot. Normally what happens with all the major indices, they will all generally move in the same direction. There may be minor changes or minor variations, but certainly on a daily basis and on an intraday basis, you will see all the 3 key indices moving in lockstep together in the same direction. And what we've got, once again, if we've got this divergence, we've got the YM, in other words, the Dow has actually risen. It had a little bit of sell-off to start with, but now we're starting to see it rise. Whereas the NQ fell straight out of bed and has carried on lower. And as I say, we've seen this several times, many, many times before, where you've got one cash market is rising and another is falling. And the NQ and the ES are both falling. In terms of points, the ES is currently down 7 or 8 points, so some decent points there, certainly the NQ. So there's a hatful of points to be taken out of that particular market if you're trading futures. And of course, from a stock trading perspective, on an intraday perspective, there are many, many different factors and facets to bring into the decision-making process. Not least of all is, what is the primary index doing for that particular stock that you're thinking of day trading? It's not always a fact of life that if the index is rising, then all stocks in that index rise, and conversely, if it's falling, they all fall. It generally happens that way if it's a relatively strong move, but not always, because there are many other drivers for stock movements, not least of all the volume. Then you've got sectors, then you've got earnings, and a multitude of other facets as well. So there's all sorts of things that come into play when you're looking at whether a stock is rising or falling broadly in line with the index. You can see there the NQ is ticking on down. In terms of where we are with GE, I've also got the tick chart here for GE. It's let's just change that to the right setting. That's 980. Let's put that on 987 tick. Be a bit more meaningful. There we are. That's on the tick chart. The reason I've got these two up here, and this applies to stocks as it does to any other market, whether it's a commodity, whether it's a stock, whether it's an index, whatever it may be. This is a way of trading intraday using non-time-based charts. Renko charts are fantastic. They smooth everything out. You've just got a brick size, so everything is very mechanical in that sense. You haven't got wicks and all the rest of it to deal with. So it smooths the noise of the market out. So as an intraday trader, it's a great blending chart to use with your time-based charts, for example. The tick chart, the reason traders like tick chart is because, like the Renko, you'll get a sense of momentum. You'll get a sense of speed in the market as the market speeds up and slows down. At the moment for GE, we're in a pause point. And when we look down at the 15-minute time horizon here, on the bottom left, I'll just pop that up full size. There we are, make it a bit easier. We had the gap down over here. Sorry, that was, where are we? Yeah, that was there. We've had this strong move higher on the open, but we've had volatility on the candle. And when volatility is in the market, then with this sort of volume, we're expecting the market to move into congestion phase. It's exactly the same principles as in other instruments and other markets. The same principle applies. So what we're seeing right now in terms of this particular stock is no great surprise. It's in a consolidation phase. And that's one of the many, many reasons of using multiple time frames, just to give you that heads up on what is going on. If we pop this down to a different time frame, let's just go to 5, for example. What are we seeing there? Pretty similar picture. Let's just pop that up full size, make it a little bit easier to see. We had the volatility come in here, the initial. Then we had more volatility. Then we moved into this phase where we get some weakness. We've got a lot of volume coming in under that particular candle. We've got a deep wick to the upper body, and the stock closes pretty much back near the open on that session. We've got a pivot high formed. We're in a congestion phase. The trend monitor still suggesting that we're maintaining that bullish trend, but as you can see here, we're seeing a transition from the bright blue. Now we're starting to see a transition into the darker blue, and possibly through into red if that's the direction it ultimately takes. But at the moment we are in a pretty strong phase of congestion, albeit on a 5-minute time horizon. Let's just pop that back over to 15. The tick speedometer over here, this is working in exactly the same way as it would do on any other market. This on a stock, and what it's delivering down here, it's telling us the tick speed setting that we need to set this particular tick chart to. And I've got this set to 987 at the moment. You can see it up here. I'm on 987 tick, and we can flip-flop between the tick and the Renko. But that's what the tick speedometer does. It's basically a blend of volume and price, where we've got the tick volume down here, we've got the volume down here, and we've got the price action up here. What it also does, it gives you an instant representation of whether that activity is high, medium, or low. And you can see as we've gone here, the tick activity here is draining away, and we're into bright red here in terms of the activity in this particular market for the time being. So it's no surprise to see we're in a congestion phase. What we actually want to see from a trading perspective, certainly from an intraday trading perspective, is we want to see these phases of green and orange, which are, green is the highest level of activity, and orange is the average, if you will, at which the market is just running along quite happily at its sort of average level of participation and activity. You can see down here, bottom left, the NQ, that's continuing on down. Traders will be piling into that, making money on the futures contract. That's moving really nicely, breaking down through these levels. And as we break through these levels, then we open up the way to the next one, and all supported by the trend monitor, which is bright red throughout. And no doubt the index futures traders will be making a bucket load of money in there. Let's just hop over and have a look at one or two others. Let's go to one I was looking at earlier on, which was McDonald's, which is MCD. I need to load up the, let's add some more days on here. Let's put that up to 10. There we go. It's just loading up on the tick. Let's hop back to the renko. There we go. And another interesting aspect of volatility, again, the gap down here, a fact of life with all stocks is that they are punctuated with these openings of a gap up or a gap down. It's just the way of the world, because futures are trading 24/7 on Globex. The cash markets open and close on the physical exchanges. And so when the markets open, you get these gaps all the time in the opening as the stocks get underway themselves. It's very easy to jump into a gapped up or a gapped down position and think that, you know, that is the market direction. And this is just a nice example with McDonald's, where the markets open gap down. We've had this big sell-off, and just to highlight this move, and it's really in sharp contrast to GE, for example, which is trading at $12. This is 161, or was 161, and we've moved down here to 156.50. That's a pretty substantial move of several dollars. And what we're seeing now is a reversal into the volatility candle, which is as we expect. Ton of volume under that particular candle, but as we always say, gaps get filled, and they do, and it's very easy to get trapped into them. When you see a gap down move, it's a classic opportunity for a gap to get filled. I'm not suggesting this one might get filled, but certainly if you look at the volume under here, we've had the volatility triggered. This stock has regained. Now, what's also interesting is we've seen this price move from 156.80 odd at this level up to 158.50, so almost $2 worth of price action in here from a day trading perspective. Certainly something that would deliver, but you'd be looking at it on a renko or on a tick chart, something like that. Whereas on a time-based chart, you know, that may not be your cup of tea, but certainly from a renko perspective or a tick chart, you would see that develop very, very nicely in terms of a trend higher, albeit it's within a bearish phase of price action. What's also interesting in terms of the volume here, you can see we've got a rising market here, but we've actually got declining volume for the time being. So this is suggesting from a VPA perspective that this market is not going to go too far given that volume, because what you want to see in terms of a rising market is rising volume, and a falling market rising volume as well, because it takes effort to go up as much as it does to go down. And then of course you bring in the other aspects, all the other aspects. You've got the indicators to help, you've got the trend line here, you've got the red trend monitor, which is signaling bearish, and McDonald's has been bearish for a little while, certainly on the faster time frames at any rate. And then you've got these levels of support and resistance starting to build. You've got this minor level here, which has been tested once from below, which is why it's red. So it's creating a ceiling of resistance, which is not very strong, but nevertheless, it's there. These levels here are extremely strong at $161 a stock, or share rather. So, you know, if it gets back to that sort of level, then that is going to present a formidable barrier to advancement of price action, whereas these minor levels here are just levels to be aware of, certainly not very strong, but there nevertheless. And in terms of a different time horizon, this is on 15 minutes, so we've got a 2-bar reversal here, which you wouldn't see on other time frames, but is very clear in terms of the 15-minute, which is another reason for using the various time frames and different charting techniques to give you that all-important different perspective on what is going on in terms of the price action itself. Let's just change this over. Let's check on the renko setting, we'll just change that to a minute. See if we're still on 2 or we're up to, okay, we're on 13 now for this one. Let's move that up. So as I said, this is now on a much chunkier stock. So as you can see here, the renko is now at 13. So each of these bricks is now 13 cents value, and very different to GE, which I think from memory was 2. So there's plenty of opportunities to trade in here if you're an intraday trader. And obviously, when you're trading stocks, the things you've got to be aware of, certainly from a day trading perspective, are the price spreads and, of course, the commissions. And that all has to be factored in. There are so many things to consider from an intraday day trading perspective as to what is possible, what is likely to work out. It's a little bit like trading in Forex, where you're looking at the spreads and trying to take a few pips out of a widespread pair is very, very difficult. The same applies to stocks. You've got to pick them with care, and you have to select them on the basis of, well, you know, what is the spread? What is the expected intraday price movement for this stock? Because if you're trading a stock which is very sluggish intraday and only maybe moves a handful of cents on the day, then trying to trade that where you're battling with commissions and spreads is very, very difficult, if not impossible. So you have to pick them with care. You've got to find stocks which will move, but you don't necessarily want to pick those stocks which have extreme volatility. I'm not going to go into historic and implied volatility, but you want to be trading stocks which have a relatively measured and even paced characteristic of price action if you're going to day trade them. And going back to what Anna was saying, it is one of the criteria that you would use as a day trader to select your stocks. That will be certainly one aspect. You wouldn't go, for example, for all, not penny stocks, but, you know, pink sheet stocks, which whiz around all over the place. They only cost a few dollars maybe. They're extremely volatile. You wouldn't necessarily go for those. You're looking for something that is more even paced, which will deliver in the day, has even paced price action, but will actually give you the opportunity to make money without having to battle against the odds of commissions and spreads, which you have to factor in. Yeah, I'm just going to pass back to Anna for a moment.
While David was speaking, I come back to the Finviz site again, and if you look across here, we're looking at the description, the general description. You've also got this really nice stock fundamentals. Take your pick, what you want to use. You know, certainly from an investing perspective, but there's every bit of information there that you could want on stocks. As I said, it's a great site for stock education, but interestingly there is a technical tab as well. And when we're talking about volatility, if we're talking about not so much the moving average, the where is it gone? Basically those who have moved in a certain day. Where am I looking at them? I've lost it for a second. Anyway, the volatility, you can actually go and just check it out and see which are, if you're going to look at over the month that move over 10%, they are really, really going to, whiz about. But there is, now where's it gone? Oh, here we are. There, that's the one I was looking for. Yes. This is what we want to have a look at, because this is actually a really nice way of finding stocks that have, as I said, screening for 5,000, however many there are on the different exchanges. is you can, I mean, our rule of thumb back in the day was 2%, wasn't it, David, from a volume? So anything that had moved like 2% on a day, that you wanted to keep an eye on, and it was, there was some obviously some activity going on. Now that could be because it was already in a strong move and you were looking for a reversal. It was already, a momentum move, and you really didn't want to join the move either up or down. You were saying, yeah, if it's going to move at some point, possibly there's going to be a reversal trade. Our rule of thumb, if you like, I mean, I don't think there's even a 2% there, but you could say 5%. So that is another way that you could go and start looking at these stocks and start to filter through, but also see what does it actually mean, so that if someone has moved down maybe on the month, here we are, let's have a look on the real long-term stuff here. Let's have a look at the week, not the week. It's down, let's have on the week, let's have a look. It's down 10% of the week. There we are. So you go 10% of the week, and it brings them all up. And let's see if they've got some. Let's have a look at some very volatile ones. I don't know, over 10%. Let's have a look, and it filters them down some more. And this is what we'll be looking at. And you think, okay, well, let's go and have a look at the chart. And in fact, if you pull the chart up, if you click on it, it automatically now. You look at that chart. Let's go back to what we was looking at before when we were looking at the price cycle. And you say, well, what is that chart? What do we actually see here? Well, we had this. It was obviously in a period of long congestion here. This is the weekly chart. You can see here, because this analysis that you do, once you understand the price cycle and you understand the relationship between price and volume, and it was going to be in a congestion period, because look at the volume. The volume wasn't going anywhere. Then we had the breakout here. This is very distorted because you have this huge volume spike under this candle here. But this would have been a massive, a volatility candle, the mother and father of all volatility candles under there, huge spike to the top with the volume underneath. But it'd been in congestion, a little bit, a bit of a sell-off there, but then, nice. It looked like it was going to be a nice move higher, and you did actually get a nice move higher until you had this huge volatility. What happens in volatility? Price goes back inside the spread of that candle, and then gradually you had this nice move down, attempt to rally. Look at the volume. I know it's not very clear on there, but it's clearly falling away. Fall away, down again, high volume under there, but again some consolidation, and there we are. And this is where we are now. So what are we looking at there? We've had this very nice price waterfall, big volume, rising volume under there. Now it's attempting to base. It's 16.95. It's actually quite a good price, David, actually, from a day trading perspective. Not scarily expensive, and not a pink sheet. And I think actually, David, if you stick it on Ninja ACOR, just to see how it's ACOR. But all this information came from here. We had looked at 10%. It had fallen 10% on the week, and we just looked at it and said, and it's a great way also when you see these big moves that have happened in this, because you can't go through this manually, is to look at it and say, how does this fit into a volume price analysis perspective? So it's kind of reverse engineering. In the book, we always say, you start with the chart, you start with the price, you start with the volume, and you kind of work your way through. Well, this way you could say, let me go and see what's been happening. I've got the principles, look at the chart, and kind of go back and say, oh yeah, that was congestion. You knew that was going to be congestion. Look at the volume spikes, then look at the candle patterns, and all this information, all this knowledge, you will kind of absorb it a bit like a sponge. And then when you look at charts that you're actually trading, you will remember, you will say, oh yeah, but I saw that over there. It's a great way. And this is just a fantastic site to be able to do this, to go and find these charts based on these parameters. And then if you you are fortunate enough to have the quantum traders, go and take that ticker and put them in. If you've got a NinjaTrader, put it into NinjaTrader and see, right, let's see what the indicators, how are they helping us at the same time.
I've just pulled up ACOR while Anna was speaking there. Is it up on your screen? Yeah. There we go. And certainly a nice example. It's obviously one of the things that you know, is always an issue is sorting, filtering. There are so many tens of thousands of stocks to sort, filter in all these different ways. This is another nice one. It's you know, it's $17. It's not a scary price. And one of the really nice things we used to look for, certainly in terms of cover call writing in the US markets, it's only 100 to underwrite the option, whereas in the UK here it's 1,000. And the vast array the other reason for trading US stocks in that way is that you have a much, much greater selection to choose from than you do in the UK. So the US market is fantastic in many, many different ways. This is a really nice example. It really just highlights the facets of what it is you're trying to do as a trader. If we look at the renko here, we've had this very solid run down. Trend monitor's bright red. Now we transition through into dark red. Now we're seeing the bullish trend develop. Trend dots have transitioned from grey. We've gone into blue. We're on the pickup. We've got a red here, but not a flicker of change in the trend monitor below. And we're starting to rise again and recover from the opening. And if we go down onto the 5-minute chart, just pop that up full size. What's interesting about the 5-minute chart, certainly in terms of the volume perspective, we saw a lot of volatility on the move lower. But look at the way the volume declines as we get to the bottom here. We had decent volume under this one, a very, very low volume in terms of this price action. Price action and volume, it's all about comparative. It's comparing one with another. It's comparing groups. It's using a benchmark candle to try and give you an assessment of whether that particular candle's volume is high, medium, or low. You can see it falling away under here. We've got a widespread candle, but we've got relatively low volume. We're certainly well into the session, so you know, in this region we're comparing light with light. We're not comparing across the session, and we're starting to see the pickup. We start to see the rise in volume. A little bit lightweight here as we're moving through here, but on that last candle here we've got decent volume under it. The issue here for holding, certainly on an intraday perspective now, is this concentration of potential resistance that we're heading into right now, which was developed, is very, very strongly developed between 1720 right the way up to 1750. So we've got 30 cents worth of congestion here, very heavy on these darker lines on the accumulation distribution, which is really laying out those levels. This is less severe. Then we get some much heavier potential resistance here with some lighter resistance here. Now, obviously, to get through that lot, it's going to take effort. It's going to take volume. If this stock is going to rise further, it has to penetrate that level. And of course, you'll be looking at it on a different time horizon as well to get different perspectives on what is going on. What's interesting over on the tick speedometer here, you can see while Anna was talking, you know, the market was very sluggish, very lackluster. We were in red, very little activity. Now, all of a sudden, you know, we've sparked into life. We've changed to green. We've got a decent tick up in volume here, and we're starting to see this particular stock move up, and we've gone too fast, which is the green setting. In terms of the tick chart itself, I've probably got to change that across from where it was before. Let's change that to, let's put it on 34. There we go. Just load that up. There we go. And on the tick chart, exactly the same principles apply. We've got the resistance and support regions very clearly laid out here as well. We're trying to battle through those. You can see the trend monitor. We went from this bright red phase into a darker red, into a darker blue, and out the other end into the brighter blue. We transitioned here into darker blue as the market paused in this area, but we never actually moved into even dark red at that stage. We've gone back into blue again. So for the time being, we're holding that particular bullish phase of price action. But you've always got an eye on what is going down in terms of your time frames down there. You'll be looking over at your renko, which is smoothing out all this price action, helping to remove that noise from the market. You've got an eye over on your tick speedometer, and of course you've also got an eye over on what the indices are doing. We're seeing a general tick up in activity, and you've also got to remember that dear Donald, with his finger, hovering over his tweet, could upset this at any second. That is a fact of life. It applies to all the markets we trade. It just so happens that, that's the way he delivers messages to the market and he likes to communicate. So it's just a fact of life. We have to accept it. You could be in a nice position 1 minute and the next minute it all goes pear-shaped because Donald's tweeted out something about trade wars and all the rest of it, or new trade sanctions, etc., etc. But we're seeing a little bit of a pickup now on the NQ. That initial bearish sentiment is draining away, although not terribly strongly in terms of the, let's just pop that up full size. The volume pickup is not great. Certainly under that last candle, the volume there looks pretty low. And once again, we're running into some areas of potential resistance overhead. This has been tested twice, not hugely strong, but nevertheless a little bit stronger than one of these, which is only one. And then we've got this massive potential resistance up here at 75.60. Just pop that back down again. We're still climbing. We're up to 17, we're now 1740 now. We seem to be battling, we're trying to battle through this region. A little bit of flip-flop on the trend monitor. We went into dark blue, now we're back to bright blue again. Under that last candle, we've got a decent bit of volume coming in under there. Nice shaped candle, no wicks to mention. So, the price action was solid and there was no particular selling in that phase of price action. Got a lot of volume coming under that one. That looks a little bit weak because we've now got a wick to the top side, high volume. So the market is struggling a little bit at this level. For that sort of level of volume, if you compare it with the previous candle, if we assume the previous candle was correct, in other words, in agreement between price and volume, then this is certainly in disagreement. If that is your benchmark candle, there's no reason to suggest it wouldn't be. So the volume here on that candle, if that's the benchmark, looking at this, we've got double the volume and the price action has not delivered. If this were in agreement based on our previous candle and volume, then you would expect this to be certainly, probably through this level actually, but certainly somewhere up near the top here, if not through it. But it hasn't. So we can therefore deduce and assume that within this region, we had some selling coming into the market, some strong selling. The wick to the upside tells us that there is a certain amount of weakness anyway, just purely based on the candle itself. The volume really confirms that. So what are we seeing now? We're seeing the market roll over. Is that any great surprise? No, because having seen that and this and the previous candle giving us our benchmark, it's what we expect to see. Now, whether you are taken out of the market by that move or whether the anticipation of that move just helps to calm your emotion and you're going to stay in this particular move for a little bit longer, those are decisions you have to make. But the key point is that you understand why the market has pulled back against the current bullish trend, because it was signaled through the volume and the price action. And of course, you're seeing that reflected on the renko. We've got this very solid area of resistance overhead, which is another reason the market stalled. Another facet of volume price analysis. Over onto tick, we've got the same thing. We're trying to breach this very, very strong area of concentration of levels of support and resistance, and the market is struggling at that stage. What's going on in terms of the major indices? Well, sort of similar picture really. You can see the NQ. Let's just have a look at the ES. massive concentration of resistance overhead for any further advancement. And you can also see here this drop away in volume here as the market reached these levels. You know, it's not terribly encouraging to see that volume falling away on a rising market, suggesting the market is either very weak. It doesn't mean that the market is just going to roll over and reverse again, but it does mean the market is weak. The buyers are not there. You know, the sellers are in the ascendancy, and the market is just looking weak. And of course, as I said earlier, you've got Donald waiting in the wings, and if he says something, obviously that is going to trigger a reaction. Okay, I'm just going to pass back to Anna at that point.
That's brilliant. Thank you. Right, we're almost at the end of today's session. I really do want to thank you for coming along, and I really hope you've enjoyed, you know, what you've seen and what you've heard, and I hope you've learned something, and I hope you will go and explore the FinViz site, because it really is, you know, it really will add to your sort of general trading education as well, by looking at stock charts and all the different, you know, as I said, looking at from different perspectives, as it were. If you haven't invested in our indicators, they are available from Quantum Trading Education. You can just buy one indicator, you can buy a discounted bundle or the complete package. You do get a lifetime license. All upgrades are free, and also when we develop new indicators, they are automatically added to your package, and we've got one or two in the pipeline as well. And we also offer a 7-day money-back guarantee. It does include 24/7 support, 365 days of the year, and as David said earlier, you can transfer from platform to platform, but there is a slight a price difference between MT4 and MT5. No, that's $894 for the package. NinjaTrader is $1197, but you can buy on what we call an easy payment plan that's spread over 3 months. So if you upgrade from MT4 and you want to go to Ninja, there is a little bit extra to pay. That's because of the tick speedometer indicator that's with that platform. If you want any more information on anything we've said on the indicators, or you just want to ask a general question, then please just either email me, anna@annacooling.com, or david@quantumtrading.com. We are back tomorrow morning, actually. What time are we starting tomorrow morning? Is it 7:15? Something really early. Well, probably not early if you're in Australia, very, very early if you are in the United States, but it's for Forex, and tomorrow we are just going to be looking at Forex. Next week, I'm not sure whether we'll do stocks again or probably Forex. Is it Forex next week? Have a look at futures. Yeah, we'll do currency futures next week. That should be fun, because as I said, we do tend to focus on the spot Forex market, but there are currency futures available, and you know, the contract size is very small, and it's great. It's just another, you know, another market, another instrument, and it's just, you know, this market, in some ways there's just too much choice in trading, and sometimes it takes a little bit of time to decide to find what actually suits you. So if you're not going to join us tomorrow, I hope you can be with us again next week. We will start at this time again. As I said, we just want to wait for all the brouhaha of the open to settle down. So if you're not coming tomorrow, have a great trading week, and we'll catch you next time. Take care.